Hey Darius, how's it going?
Going pretty good. How you doing?
I'm great, thank you. I just realized that my computer restarted everything, so I got to pull it all up again. Oh my goodness. Alrighty. Gonna start in a couple minutes here.
Alrighty.
By time to hop on. How was your day?
It's pretty good. How about yours?
It was good. I was lazy. I did not get much done this weekend other than business stuff and
I
stuff.
didn't. I didn't either, so that means I'll be up late tonight trying to do something.
Yeah. Yeah, I was not productive. I called myself, I was trying to get my son a haircut, and
Uh,
um, I'm gonna wait till Sunday. I should have went yesterday, and I'm riding around today trying to find another barber. And I'm like,
right.
everything's closed. Don't nobody cut hair on Sunday.
Right.
That was silly, silly. Now let me go straight again. I ain't get nothing done. Let's see. I'm gonna pull up.
At the event, in Atlanta that you missed, were they gonna do some trainings or what were they doing at this particular event?
Yeah, it looked like they were gonna be doing some training. Let's see. That's why I wanted to go. I'm sure
Mm,
I've seen it before. I'm sure they'll do it again. It's a Super Sunday, so I'm sure they probably maybe do it every week or twice a month. But it said that they had steps to becoming a skillful trader. I think that was Ken Tucker that was probably going to be giving some uh,
okay.
training, and 5 easy ways to learn profit. And then the second part was they were going to talk about team building and back office and placement,
Right.
like how to do your manage your business side. So,
Okay.
oh, babies.
You can hear her?
Mhm.
Yeah.
Mhm.
She won't down out the high chair,
You okay?
trying to feed her.
Mhm. Here. All right. Let's see. I think he's gonna do that bottom. I'm trying to be sweet. You must be the only one trying to learn something.
I see that.
I usually try to do. I would do these like once a week, but every time that I do them, it's maybe like two people that get on. So I just take it from them and see like if they want me to do something, I'll do something one on one. I'll do something whatever.
Uh,
But you got to show up to learn. So
so you would normally do these once a week, and only one or two people will get on?
I've only done a couple because usually they don't get.
That's crazy.
hmm I'll even do one on ones with people if they have questions or whatever. I will. I don't mind. I love doing this stuff.
Uh,
But yes, I just try to keep them motivated and answer questions. But
right. How long have you been trading?
I've been trading about 3 years.
Really?
hmm I took a break
Okay.
and quit maybe for like 6 months though,
Uh,
because I was like, this is.
right.
It takes me a while to get stuff, but
Uh,
I have a long term mindset. So even though I was frustrated, I took a break, but I came back.
right.
And yeah, so
Yeah, 4X is, I've never seen nothing like it.
yeah, it's pretty sweet.
Yeah.
Pretty sweet. And the only thing with it is that people have to understand you have to figure it out for yourself. Not like figure it out for yourself. I mean, all the training and stuff we have at IML, wonderful. The live sessions, the IML Academy, the tools and everything, it helps you to learn quicker. But
Right.
the part that people miss is doing the work. You
Right.
have to do the work yourself, even though we have some strategies and we'll share with everybody how we see it. This is stuff that I've had to tweak over, like I said, years. Like,
Right.
for me, it took that long because I mean, I work full time and I'm a single mother, so those are my
Right.
priorities. So I've spent a lot of chart time studying. I've read trading books. I've been on these charts for hours. So, but I had to learn a whole bunch of stuff and get through a bunch of hurdles, personally, mentally as far as reading the charts. But I just had to keep what worked and then left what didn't work. But it's like, it's trial and error.
Right. Right.
So,
Yeah, you gotta practice. That's the part people
yeah, that's
feel
the
like they
hard part.
gotta.
The more you
Right.
practice, the faster you're gonna get it. And even if somebody's strategy doesn't work, if there's parts of it that you do like, then you keep that and you move on to the next. And just
Right.
keep practicing. Hey, Adrian.
Exactly. A man can literally.
Lola. All right, I'm gonna mute you guys.
All right.
I'm going to share my screen. I know a couple other people are hopping on, so I'm gonna give it like 2 more minutes and then I will start. Let me see. Oh Lord. I am always might take these off of here. Let's see. Oh, there's hey Tasha. Hey Pam. Hey Audrey. I knew all 3 of y'all would hop on. I'm just giving everybody a couple minutes to hop on here, and then I'm gonna start in like 1 minute. Hey, 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 hey. So what I'm gonna be showing tonight is a strategy to look at getting entries with the trend. So trading with the trend and where you could potentially enter. Awesome, Audrey. Appreciate it. Yeah, and so a lot of you probably already have your own trading style or your own trading strategy, but I just wanted to show you how I look at it as far as moving averages. I absolutely love moving averages. They are simple to me. I can see them on my phone, easy, even with the small screen. I can easily see a moving average and where price is going. So that's why I use it as a guide. So I use the moving averages because, let me make sure this is recording. I use, 1 second. Okay. I use the moving averages because the market and price uses them as like a magnet. So and support and resistance. So when you look at how the moving averages and price moves around them, you can kind of tell where price is going based on some things I'm going to point out. Hey, Jervy, how you doing? All right, so I'm going to go ahead and get started, Jervy. We're just going to be going over a simple strategy that you can use to trade with the trend. I have another strategy that I do use based off of reversals, but I think this one is easier because you always want to trade with the trend. And trading against the trend takes a little more practice, so we're going to go with the trend today, okay? All right, so where'd my words go? I think I lost them. Really? I'd be fighting with trading views sometimes. Well, that's why I put them in a document. So let's look at the document. All right. So this is the trading rules. Did I put all of them on here? Oh wait, that's not it. Sorry. I lost my file and I had to pull it back up. 1 second. 1 second, hopefully. All right. So what we're going to do is, first we're going to see what we're going to use on a chart. So what I have on my chart is a 14 exponential moving average. All right, a 14 exponential moving average and a 50 exponential moving average. You can get those indicators by clicking on indicators. Some of you are new, so I'm just gonna make sure you know how to get the indicator, and just type in exponential, and it's gonna be this moving average exponential. You're going to click on it, it's going to put it on your chart, and you can edit the number or the data of the file by clicking that input, and then you type in 14. All right, 14, and then you'll do another one that says 50, and then you'll click OK. So I'm going to get rid of this one because we don't need it. So that's how you put it on your chart. And then you can add the RSI if you want the same way. Just click indicators and put the type in RSI. So that is pretty much all I'm using for this. All right, so we have those moving averages, and then let me take this off. And so, yeah, what I was saying was you can see easily how price uses the moving averages as support and resistance. So pretty much when you see price like pushing away, far away from the moving averages, it's always got to come back. You see how it uses it constantly over and over as support and resistance. All right, especially the 14, because it kind of moves a little bit closely to the 14, so you can see when it pushes away, it pulls back. It always comes back. Price can't just go floating out into nowhere. So it gives a little bit of structure to what you're doing. So you can scroll back for days and you can see that price moves around the moving averages. All right. It also, I have the 50 on here because it uses that, especially with the trend. It uses that as support as well. So you can see where it, and I have some arrows here where it touches. All right, so we're looking for areas to buy and sell. So when it touches the 50, you can see that it uses it as support. And so I'm just pointing that out to you. That's why I use those moving averages. Now there's other moving averages that you can use that the market does use as support and resistance, but I'm just keeping it basic. All right, so you have those. Part of the strategy has to do with a crossover of the 14 and the 50. So I put on here that you can do an alert, which I do always have I don't know, I'm like the alert lady. Because I'm so busy, I don't have time to stare at the chart and wait for a cross. So you can do alerts. That's what I have over here on the right side. Euro JPY is the only pair that I'm watching right now, so I have my alerts set. And what you can do is you right click add alert, and you're going to leave it as your you're going to put it at select the moving average, and then you're going to leave it at crossing, and then you're going to go to value and you're going to make it 50, because what we're saying is that the 14, when the 14 crosses the 50, we want an alert. All right, and then I put it at once per bar on close, because if you just select once, it will alert you, but then it'll close the alert. It won't alert you again, but we want it to alert every time that it crosses. Okay, so I do that one, and then I do the send email to SMS so I can get it to my phone, and then click create. Now, I don't know if you guys have the paid version. I've talked about this before, but I think you can only get a couple alerts with the free version. So yeah. All right, so I'm gonna click cancel. But that's how you set the cross alert. So that way when it alerts, then you know to look at your pair. So rule number 1. The first thing that we're going to do with this strategy is we're going to go to the 4-hour chart. And we're going to be just using the 4 hour and the 1 hour as looking at the trend. All right. So, sorry about that. All right. So there's more. So if we're looking at the trend, pretty much we notice the trend is up, and we know that because we have higher highs and higher lows. We have a double touch here. It's slightly higher, but this is higher. This low is higher. All right, so we're higher highs, higher lows. It's an uptrend. Pretty much you can look at it and tell that it's up. The simple way to look at it is when both of my moving averages are pointing up, the trend is up. All right, simple. Go to the 1 hour. Everything is also up, right? Both moving averages are pointing up. So we're going to be looking for buys. Buys only. Don't sell when the trend is up. If you're going with the trend, we are not going to sell at all. So the 4 hour and the 1 hour tells us that we're looking for buys. All right, that's how we're looking at the trend. So rule number 1 says when price is above all the moving averages, well, both moving averages, the 1 hour and the 4 hour is up, we're buying. And if price is below, then we're looking to sell. All right. So meaning like if both moving averages are pointing down and the trend is down and you see that price is, I'm sorry, let me zoom this in so you can see what I'm talking about. I do this all the time, making people dizzy. So you see how price is below both moving averages, so we're going to be looking to sell in that case. That's if we were in a downtrend at that time, okay? So that's pretty basic. Shoot any questions in the chat if you are not following along. But pretty much once you have your moving averages on there, the first step is to look at the 4 hour and the 1 hour. If everything is up, then we're selling. If everything is pointing down, then we're, if everything's up, we're buying. If everything's down, we're selling. Now, just make sure that here's a tip. When it's flat, don't trade, okay? When the moving averages are closely touching, it's consolidating, it's going sideways. Yes, there's some movement there, but we want it to be a clear buy or a clear sell. So meaning like when the moving averages are separated, there's space between them and everything is pointing up, price is above both moving averages, then you're going to be looking to buy. So everything has to be clear, not here where it's starting to flatten out and price is just ranging above or below the moving averages. It's in a ranging area at that time. So I think we went over that. The trend must be strong. So where are we going to enter? So we are going to enter, and I just pointed out some examples. You can do this actually on a 1 hour or the 15-minute. And what you're doing is you're looking at the wicks. There's a couple of things I look at to enter, but once you get an alert that price has crossed the 1 hour, you can do it I'm gonna go to the 15-minute, all right? Let's look at a cross up on the 15 minutes. All right, so we're in an uptrend, we're waiting for it to cross up. If you're in an uptrend on a 1 and a 4, then it doesn't matter if it crosses down, you're gonna wait for it to cross back up because we wanna go with the trend. So now it starts separating, all right? It's separating and it's moving up, and we have a cross here. There's 2 ways that you can enter. I have these indicators on here, or you don't need the indicators, but what I look for is a bullish engulfing or a bearish engulfing candle, because what that tells me is that that there's going to be a push up, all right? So the candle before it, and I'm looking at the green candles, all right? And they're green because my indicator up here, the bullish engulfing email alert, it doesn't really email me, but or the bearish engulfing, right? It just highlights them so it brings my eye to when it forms. You can enter after the cross, you can enter once you see a bullish pattern, a bullish candle, all right? So, and it's bullish engulfing because the candle before it, and let me highlight what I am looking at. The candle before it is smaller, and then the bullish move up after it is bigger. So it covers the whole surface of the previous candle. I know that's kind of like grayed out, but hold on one second. Let me move my mouse. All right. So hopefully you see that. So this orange candle is a little bit smaller, and you have this one covering the sides. You also have one here. So either one of these you can enter on the close of that bullish engulfing candle. So once you see the cross, a bullish engulfing candle, this is in a bullish market or an upward trend, then you can enter the trade. That's entry number one. Now, number two, another way that you can look at it is I look at the wicks. When you see wicks, when you see like an upward movement, let's say you caught this late, you can enter based off of the wick bouncing off of the 14. So if you see a wick touching or crossing the 14, and then right after that candle closes, you can enter for a buy. All right. Let me see if I can show you on the 1 hour too, because it happens a lot on the 1 hour. You can catch a little bit more pips on the 1 hour, but you can see in this upward trend, right? We have a cross here. Now this is on the 1 hour. You could do it on either or. You see it crosses up. You'll get the alert somewhere around here. And so you can enter once it pulls back and touches the 14, and then you can buy on that candle. Or you can wait. Now this has some consolidation before it continues to go up. It's not really making a move, but you know that it's pretty much going to go up, especially when you have a cross on the 1 hour. All right. So I look for wicks touching the 14 pretty much in the short version. Looking for wicks, because wicks mean that it's using the 14 moving average as support. So it's touching it, but it's bouncing off of it. So once you see that touch and the push back up, you can buy at the close of that candle. This right here, when you see this, a couple candles for what, 3 hours, bouncing off of the moving average, you can buy in that sense because you know that it's going to make a push up, especially when you see a little pullback, all right? Because those are just mini retracements in an upward market, all right? This is a perfect entry right here. Actually, the most perfect entry. Why? Because I have both a bullish engulfing candle and I have a nice long wick crossing the moving average. That's actually a beautiful entry. I think I was in this trade here and here last week. They were perfect setups. So this right here, when you see this doji candle, it's consolidating, but this wick bounced close to the moving average. Hopefully you guys see what I'm talking about, this little doji. And then you have a candle here. It's trying to push down. It bounces off of the 14, and you have this wick. The longer the wick, usually the bigger the reversal, all right? So if you have a wick pushing down for quite a bit, and then it pulls back up and then continues up, that's a good sign of reversal. So once this candle closes, I'm going to buy, and you see that it continues to push up. All right, so that's what we're looking for. When it starts, when price is in between, I don't do anything with that. It starts flattening out here. This here, you have another cross. They're separating. You could buy here. You don't really have any bounces, but or any bullish engulfing, but it is a cross. And so yeah, and then you have a bounce again here. So anytime you see a pullback, right? So price pushes up, it starts slowing down, you can get out of the trade up here, and then it pulls back down like a magnet because the price is like a magnet to the moving average. And then it bounces off of here, and you can definitely buy here once you see it respecting the moving average, okay? So that is pretty much the simple form of it. You're waiting until both moving average are separated, they're moving in the same direction, and you have a cross. So preferably you want to enter the trade when the price is close to the moving average, not when it's up here. All right, so don't try to enter the trade when price is already made its move. So you're wanting to wait till it hugs the moving average. It's kind of consolidating a little bit, and then you have a confirmation with a wick touching or bouncing off of the 14. If you can catch it on the 1 hour, that's good. But if you just want a quick move, you can definitely do it on the 15. So I have my alert set for the 15 and the 1 hour. So let's see here. Sometimes you can also catch it off the 50. So if you see that it's respecting the 50, you can buy as well with the trend. So you can see here, like there's a wick here touching the 50. Once it, you see a bullish engulfing candle. I like those as confirmation, but they're not always there. But if they are and you see them, that's a good sign that it's going to continue up for another move. All right. So I look for the wicks. Wicks touching, bullish, engulfing, buy. Wick touching the 50, bullish, engulfing, buy. Wick touching, you don't have any bullish engulfing, and it's kind of consolidating. So, you know, you could wait and see if it's going to move up and then buy. That's up to you. All right. But I like those as confirmations. The wicks touching and a nice moving candle in that direction. So let's see if I can go back and find other. Anybody have any questions? So here's some more, right? So we're waiting for that cross up. Big wick, right? So this one's respecting the 50. It didn't break. The candle didn't close and break below the 50, right? Because a lot of times when it breaks below the 50, that means it's going to be, the moving averages are going to cross shortly. So it didn't. It threw this big wick and it pulled up and formed a nice bullish engulfing candle right along the moving average. You guys see that? So it really uses these as support and resistance. So especially for people who may not know how to draw support and resistance, like with the lines, the horizontal lines, then you can, yeah, it works with sells. It's the market has been bullish, so I'm showing bullish setups. But if the market is a bearish market, then you're going to be looking for sells. So that's just higher probability to go with the trend, because you'll notice that you will get these crossovers, right? You see how, so we noticed on the 4 hour, right? On the 4 hour, so this is UJ has been in an upward trend for quite a good while here. It's been like really pushing up. So yeah, so this is the 4 hour. You see how this is strong upward movement? So it did have this pullback here, but it's strong to the upside. And even on the 1 hour, it's strong to the upside. So will you have downward pullbacks like this here? Yeah, and you can take those. I mean, if you're looking at the 1 hour, you're going to have those retracements. Remember how Fibonacci works. And whenever you have upward movements, you have those retracements to those Fibonacci areas as well. So you're going to have pullbacks. So you could take those if you're just scalping for a couple pips. Yeah, you can go against that, but I would wait until the moving averages really cross and they separate. Don't take these little baby crosses, or if it's not really clear that it's going into a downward mini trend, and like right here. So we're looking for buys, but you see this cross down. Typically, you would wait to go with the trend. You'll wait till it crosses back up. All right, so it crosses down here. If I'm going to take this for a sell, what I'm going to do is the same thing. I'm going to look for these wicks for a price to be below both moving averages. And I'm going to look for these wicks to be respecting this 14 moving average. And then I like to take it when I see the bearish engulfing, right at the close of a bearish engulfing, meaning it's pulled back and then it's going to start continuing with the downtrend. So that's what that candle means to me. But I don't take them when like the RSI is real low or it looks like it's going to reverse. All right, so when it's away from price, I don't take those low candle patterns. I like to take them when they're close to the moving average, because then your probability of it continuing that direction is more, or is higher. Okay. So yeah, it works in any, see, even right here. Okay, when the 14 moving average is above, you're looking to buy. So and you have this cross up here. You definitely could buy here for a nice move. Or you could wait till the pullback and then it crosses back up again. You have a nice bounce off the 50. So that's really all you're doing. Now this is the hour. The hour setups are a little bit stronger, but it works the same way on the 15 if you want to catch a few pips. Here it pulls back. It's respecting the 50. You have a downward. You have a bearish engulfing. It's small. It's a small doji candle, but you do have a wick there, so you can sell at the close of this candle. Now, when you set your stop loss, you can do it for either, for example, pretty much when you enter these trades, it's usually going to continue in that direction. But if just to protect your account, you can either set it at the bottom of that wick of the candle that you entered. So if you, let's say you entered on this candle up here, you can either just set it for below the body of the candle or below the wick of the previous candle. All right, so what I'm looking at is, because this is going to come where you can tweak it kind of yourself and what you're comfortable with risking. But if I enter up here, I'm going to set it either here or here. And that's probably usually going to be about 10 to 15 pips. So sometimes I'll just go ahead and set it for 10 to 15 pips or whatever you're willing to risk. Take profit is going to be anywhere between 10 to 20 pips on these. So once you reach your 10 pips, then you can close the trade. Are you still entering where there are 3 candles or as soon as it crosses them? So when it crosses, what I'm looking for is a touch of the moving average with a wick. So a higher risk entry would be entering as soon as it crosses, right? So if you want to enter as soon as it crosses to get in and out, you can do that, but it's higher risk because there is a chance that, like you see here, it crossed and it, well, this is the candle that's crossing. If you enter when it crosses as soon as it crosses the moving averages, sometimes you'll get caught in some pullback is what I'm trying to say. So because the market usually pulls back and tests the moving average before it continues up, you want to wait for the wick to touch. So you wait for the wick to touch, and then you'll buy on the close of that candle. In this case, let me find a better example because you would have been fine entering that, but you might have got caught in some pullback. Let me see another cross. So yeah, this one crosses, but you see how that they're still close. The better confirmation is to kind of wait until either you see some wicks pull back and touch it, and then you'll sell on the close of that candle. All right. So once you see these wicks touching, let's say you caught this a little bit later, because sometimes the alert doesn't come until the candles are already down here. So you're going to wait and make sure that these are continuing in a downtrend, that you see the wicks touching or pulling back at least close to the 14 moving average, and then you can sell. Like I said, sometimes I'll wait until I see a bearish engulfing candle, meaning that it is for sure going to continue in that direction, and the moving averages are both trending down. See, at this point, it's coming off of a consolidation area. So they're totally flat. They're not doing anything. So before I enter this into a sell, I want to be sure that they're both pointing down. So that's the confirmation, is the separation of the moving averages, the wicks coming back to nearly touch the 14, and then a bearish, some kind of bearish looking candle, because these are kind of small, but some kind of bearish engulfing candle that's larger than the previous candle before it. You can enter as soon as it crossed, though. I mean, you can, but you just want to make sure that it is trending in that direction, because sometimes it can cross and then it could cross back up. That's why I say to go with the trend. How do you set the moving average alert? So you just right click on the screen and then add alert, and then click on EMA 14 crossing the 50, and then just change this to once per bar on close. And the date pretty much sets it at like 30 days. So you can just leave the date at 30 days, or you can extend it whatever you want. And then you don't have to have it send you emails. If you just want to get the pop up on your computer, it'll pop up with an alert or a sound. But most people, are on the go. So I like to get them to my phone with the email. I don't know if you can get the email though if you don't have a paid version though. And I haven't figured out how to do the cross on the MetaTrader yet. I have not figured that out. You said to make sure the 15, 1 hour, and H4 are all the same. Yes. So let's look at, yeah, they got to be in the same direction. And price should be above all of the moving averages on all time frames if it's in an uptrend. If it's down, you want price to be below. But, make sure it's not too far below. So you want your entries should be close to the moving averages right after the wick touches and crosses down. Now, this is not an example, but what I'm saying is if you wouldn't enter a sell down here, okay? That's why I like to peek at the RSI sometimes, because you're not going to enter a sell all the way like, okay, price is moving down, but it's away from the moving average. So I'm not going to sell down here because I see the RSI is getting kind of close to being oversold, and this long wick, remember, shows the sign of reversal anyway. So I'm never going to enter on a long wick, and I'm not going to enter when price is already away from the moving average. So that's just a tip. You want to enter when it's close and bouncing off of the moving average. Let's see, I was going to show you. So I entered in a buy on EJ that I already closed out for this evening because I saw that price was above. So the 4 hour. So look at the 4 hour. Price is clearly above, right? It's way above. Now I know it said don't enter. I'm not talking about the 4 hour. So yes, it's far away from the moving average on the 4 hour, but that's a longer time frame, right? And so what my analysis was, it is at a zone here. So I'm thinking it's going to have a pullback, because remember that it's a magnet. So it's not just going to keep going up and up and up away from this moving average. Most likely at some point you're going to have a pullback even on the 4 hour. Okay. But when I drop to the 1 hour, you can see that it's hitting this area up here. This previous area is coming near there, and it's slowing down a bit. The RSI is moving closer to the upside. So it's going to retrace shortly, all right? But when the market opened, the reason why I entered a buy was because it was down here, okay? So price was closer to the moving average, and I saw that these couple wicks here were bouncing. So it was eventually going to go up. Hopefully that makes sense. So price was above on the 4 hour, the 1 hour, and the 15 minute. See how it's above? Above. So the entries are just better. You get caught in less pullback when you enter on a 15 minute. So price was close. All right, but I wanted to wait until it starts separating and moving up. Price was above, started to become above the 15, so we can definitely buy there, especially since this wick pulled back and touched. So it's just going to take practice for you looking at the wicks, but it is quite simple. If you're following the trend, it's hard to lose. Yes, it's being recorded. I'm sure you have to go back and watch. I do have it written out the best that I could write it on here. So your stop loss, sometimes I'll just do it 10 pips, or you can look at your chart and do it below the wick, like I've mentioned. And I've mentioned the long wicks. Don't enter the trade unless it's I said that. Definitely don't trade when the market is sideways or choppy. It has to be a clear trend. That's pretty much it. And then I just recommend you to only focus on one pair because you really don't need to be jumping back and forth between a lot of pairs. I know we have a habit of doing that. Maybe two pairs, watch them, just in case one is not trending and it's real choppy, then you can have a backup pair and just have your alerts set. Oh yeah, that's why I typed it. You can see the rules. Yeah, so pretty much there's two kind of rules. You can enter based off of the wicks bouncing, or you can enter off of the bullish or bearish engulfing candles, or both, or what have you. A lot of times you'll see both happening. It'll be crossing at the same time. You'll have the engulfing candle there as well, and the wick. So that's just triple confirmation. Also, I mentioned the RSI, but I like for the RSI to be like in the middle. So just like I said, don't enter like a buy up here. Try not to. I mean, sometimes the market will stay overbought, as you all know, for some time. It'll hit the RSI and you'll think it's going to reverse, but it can, if the trend is strong to the upside, it could stay up here. But in general, I don't like to see it already way overbought and then try to buy. Okay, you got to wait until it pulls back and then crosses back up again. So your entry is going to be closer to the moving average. Yeah, it's real simple, Audrey, especially when you're following one pair. I noticed that. If you're looking at one pair, you're just waiting for the cross, either waiting for the cross, or let's say if you caught it, you missed it, you were at work or whatever, you couldn't enter, whatever. You can still, if you go to your chart and you're checking it and everything's on the up and up and you see these wicks, like if you see these wicks bouncing right here, go ahead and enter. You can still enter for a buy if it's touching this 15, or if you see this bullish engulfing, typically it's going to go up. Now it is close to the RSI, but the trend is strong. So in that case, you won, but let's see. I can try to look at another. Oh Lord, why I have to have all these lines on this one? Let me see something. You guys have any questions? Let's see. Yeah, keep it super simple. Yeah, I always used to fight the trend, but we all know that we win more. They say you got to go with the trend. So my easiest way to look at the trend is a moving average. And when everything is up, you pretty much can't lose, especially if you're waiting for that pullback. Wait for the pullback. I don't have the wicks highlighted on here, but there's a wick right there. And you can pretty much buy at the close of that, those candles. Or, I mean, you can come up with your own. If you want to wait until it crosses up on the moving average or whatnot, this is just a guide, okay? It's not the end-all, be-all strategy, but it's, this is how moving averages work. They are like support and resistance. It's just that don't play around in the middle here when it's all in the middle or when it's flat. Everything has to be up, strong to the upside, right? And then you'll buy. You see these bullish engulfing candles? You can buy here. You can buy here, right? Flat, don't trade. Don't trade any of this. This is flat. So it's an easy guide because when they're smushed together, you're not going to trade. When they're spread apart, then you buy or sell. Easy peasy. Yes, yes, yes. We're going to win with this. So so most of you guys know, I know we've been doing pretty well with EJ. I really like the way it moves because it moves pretty good and quick. That was actually Kenneth's plug, because he kept crushing it on EJ. I said, let me look at this pair, because usually I trade EU or AU, but it is a nice moving pair. And I actually have hardly ever lost with it, actually, especially if you go with the trend, because it trends so well. The trend is usually pretty strong. and it's just really nice moving. So we are going to be trading that together this week, and just taking some trades, and we will be profiting from that. You never realized that about the, yeah, EJ. What didn't you realize about the MA? Oh yeah, yeah, the separation. It's almost like, okay, everything goes together. Like, you know how some people use the Bollinger Bands? Like the Bollinger Bands have a moving average in it. And I think, I forget which one, but it's like a 10 or something. And so I almost think of them as like part of a Bollinger Band, because when the Bollinger Bands come together, when they smush together, then you don't want to trade because it's flattening out. But when, you know how it says when the outsides, when they separate and it gets bigger, then the trend continues. So I almost think of the moving averages as that, except I don't trade well with Bollinger Bands. So the moving averages make more sense to me because I can see that price is clearly on top. You know, you can see it. It's on top, up here. Everything is on top, I'm looking to buy. If it's in the middle, I'm not doing anything. If it's flattened, I'm not doing. Everything has to be clearly on the top or the bottom. And then from that point, you just look for your wicks to bounce off and continue with the trend. That's it. Now, yeah, is there support and resistance in there? Yeah. Is there Fibonacci's retracement levels in there? Yeah. But why complicate it with anything else? The only, what was I going to say? I had a tip. Oh, so how do you know when the trend, this is the last thing, when it's going to reverse? So of course the trend doesn't always continue, right? So you will know to get out of a trade or when it's reversing into a downward trend if you have like a nice support and resistance or consolidation in an area and you see that it's like turning around. So for example, like if I were to buy right here, and it comes up to this previous area of resistance and slows down, and creates like an M. If it continues, well, I'm going to get out. This is the 1 hour, so I would have already been out of my trade. But you would have to wait until it pulls back to the moving average, right? And test it again with a wick, and then continue up, right? But you'll know that it's going to reverse because it will use this area. Whenever a trend reverses, it's going to use support resistance, and it's going to bounce off, and it's going to reverse. And it's going to eventually, the moving averages are then going to cross, right? So once the moving averages cross, and you start seeing it going into a downward trend, a clear downward trend on the 4 hour and the 1 hour, then you're going to start looking at sells, all right? So you have to wait until everything starts, because what's going to happen is price is going to be in this area. It's going to start going in between the moving averages. Then the moving averages are going to cross, and then it's going to start going back down. All right. So until that happens, you're pretty much looking for buys. So hopefully that made sense. So I'll show you like here, you see this area. Right, so you had a retracement here, a pretty big retracement for a while, and you had a couple touches here. When it starts slowing down like this, and then you see it cross back up, it's going back to the upside, all right? And then you have another touch of this same zone, and then it continues back up. So usually it will do that. When a trend ends, you have some kind of pattern at the end of the trend. Now this was kind of in between the trend, but you see it here again. You see this? It's always like a double touch of the zone, right? So you would have, let's say you entered up here off the bounce and you took your profit. Well, you know, you're going to get out when you see everything starting to reverse. All right, so it's slowing down, it's crossing back up, you have another touch, and then it starts crossing back up to go to the upside. So usually some kind of W or M or head and shoulders or something forms when the trend is reversing. All right, that's it. That's all I wanted to say. So you can, you guys can practice that. Anybody have any questions about anything? Above? Oh. Oh, okay. Can you change the engulfing candle on the MT4? Oh, you mean change the color? I don't think so. But I just look at it from my phone. I can see them. You just have to practice seeing them. Like as long as you can change it. Oh, how you change it? I don't think I know how to do that yet. I hardly ever use MT4 properties. It has a selection for the bearish engulfing or bullish the engulfing candles. I've never seen that. Oh, she wanted to know on MT4. Let's see. Yeah, I don't know of a way to do that on MT4. I got all this stuff here. What is this? Yeah, on TradingView. TradingView is the only way that I know how to do it. Yeah. Yeah, you just have to look at it on your phone and you know, if the trend is up, just look for those candles that are larger than the previous candle and you'll see it. It just takes a little practice. Now I do know that what is it? Net Denia. That's the only thing I know from my phone I can see, but you might as well just pull up TradingView on your phone through the browser and you'll be able to see it if you have the alerts on there. So if you're able to put the alerts on your desktop, like on here, if I go and open my phone, I will be able to see it from my phone on the browser, on the internet, just like that. I don't really like the TradingView app, but yeah, that's the only way you'd be able to see it on your phone. Otherwise, you can just simply look at it on your MT4 and look for those candles that are larger than the previous candle. Mm-hmm. All righty, any other questions? All right, cool. So I will give this recording to you all and the documents so that you guys can practice, pick your pair that you're going to follow, and that should be good. I think this is going to reverse soon. You're welcome. All right, you guys have a good evening. You're welcome. You're welcome. See you soon.